Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20 minutes, we'll talk about a couple of particular aspects of mutual funds. The last few days, there's a bit of a fervor in the market. There's a bit of a risk-on element that is coming up. Whether it's a suckers rally or no, time will tell. But there is a bit of a fervor. And the question mark around everybody's mind is that if you want to reinvest or start investing again into flexi-cap funds, not that I thought that the SIP stopped, but if you want to restart, say, lump sum or a fresh SIPs, are flexi caps a good category from a medium term to long term perspective? So many of you asked us this question on social media as well. So we thought we'll take the bull head on and talk about this particular aspect. And it's just great coincidence that White Oak Capital is launching or has launched a flexi cap fund NFO during the same time. So we have Ashish Somaya, who's CEO of White Oak Capital Management, join the show. Does keep his founder Credence Wealth Advisors, and again needs no introduction, been with us a number of times on the show. Gentlemen, both of you, thanks so much for joining in.
Thank you, Neeraj.
Okay, so Ashish, interesting time to launch a flexi cap fund. You think the market conditions also kind of support that? Why this time? Why this offering?
So Neeraj, I mean, I'm afraid the credit for the timing must definitely go to the regulatory processes. I don't think we can time this at all, frankly speaking, because as you may be aware, we completed the acquisition of Yes Bank's asset management company somewhere in November 21. And after that, we started filing for our products. There's an approval process, and that's how we hit the market somewhere in July 2022. And yes, in hindsight, it does appear like, as good a time or maybe better than some of the other timings as far as launching a new venture and hence launching a new or the first maiden fund. I think great opportune time from that perspective. I know your question is more specific to flexicap as a fund or as a category, and I would say that last 5 to 6 years has been quite a roller coaster, because when we say flexicap, obviously it means that we are talking about investing across market capitalizations. And last 5 to 6 years has been quite a roller coaster, because if you see 2015-16 till 2018 mid, small and mid cap did very, very well. 18 to 20 mid, small and mid cap did very badly. From 2021, small and mid cap again did very well. And then from end of 21 till date, small and mid cap seems to be lagging. So at White Oak, our belief, frankly, is that given the kind of changes to macro parameters, and those macro parameters hence put caps in and out of favor, depending on the macroeconomic conditions. And the market conditions, of course. So I think it's very, very difficult to time which market cap you should be in. So at White Oak, for instance, our belief is that we should run the fund with about 30 to 45% in small and mid cap at all points in time, and never really swing totally in favor of large cap or totally in favor of small cap, really. So considering that small and mid caps have been lagging large caps by quite a margin in the last 9 months, I think from that perspective, it's a great time to be invested in any fund which has a substantial small and mid cap. Our industry obviously confuses the matter with having something called multi cap and then something called flexi cap. But at White Oak, there's no flexi cap, multi cap. There is just going to be one fund which will have anywhere from 30 to 50% in small and mid cap.
Is that at odds with the industry, Ashish? I'm just trying to understand what is the, a retail investor would be trying to think of what is the USP that this new fund offering brings to the table, that I should choose this one over the multitude of others already there in the market?
Sure. So first on the industry and, from the investor's perspective, look, Neeraj, we all know that whatever in the industry is today called flexi cap, till 2-3 years back was originally, it was multi cap. And there was a point in time, 2018 to 2020, small and mid cap hit a big slump. And all the multi-cap funds, they ended up becoming something like 80-90% in large cap. So then obviously the regulator was right in pointing out that your multi-cap funds are looking like large cap. They're not looking like multi-cap. So multi-cap has to be minimum 25% small cap, minimum 25% mid cap. Basically, if you call it multi-cap, it has to be all cap, right? So what is the history? The history is that currently what the industry is running as flexi cap was originally anyway supposed to be multi-cap. So the only thing White Oak is doing is to launch something which was genuinely what multi-cap was supposed to be, and not getting confused with nomenclatures. Because even if we call it multi-cap, then again we'll have minimum 25% small cap, minimum 25% mid cap. We don't want all those limitations. So we want a fund which runs like what multi-cap used to run, but then don't want to get caught up with a minimum level and the nomenclature and those complications, right? That's the first. Second thing, how is it different? Well, two or three things. Of course, there is a stock picking process and an investment philosophy, but I'll just bring out the two or three differences. Usually, when a new AMC comes, you have no idea of what is their portfolio performance, track record, nothing at all. In White Oak's case, it's a bit different because while our domestic mutual fund is coming only now, as a group, as a house, we already manage about $5 billion. We are one of the larger, within the group, we are one of the larger investment managers for foreign portfolio investors investing in India. We already have a PMS and AIF, which we've been running for 3 years. So last 5 years, White Oak has been running global funds investing in India. Last 3 years, we've been running a PMS and AIF. So within the group, within the investment team, and Prashant, who's our founder, ex-CIO of Goldman Sachs. So there is a track record. There is a 32-member investment team, which is very, very well resourced, amongst the best resourced teams in the industry. I'm sure your viewers have had the opportunity to interact with some of them in the past as well. So I think that is something. The other important thing is that generally everything to do with fund management is all made out to be all about stock picking. Where White Oak is significantly different is that we focus a lot on portfolio construction because the portfolio is not a list of stocks. So if you see in the industry, winners rotate. Why do winners rotate? Because the best of funds and the best of stock picks goes out of gear when the macros change, right? That's why winners keep rotating. So I think portfolio construction is very important. And at White Oak, we focus a lot on portfolio construction such that we are able to generate outperformance over BSE 500 as consistently as possible. So I think in short, these are few things that one might want to really look at. But otherwise, we hope that people can experience us as we go along.
Okay. Kirtan, coming on this argument around the timing for Flexicap fund investing. Now, what's your sense here? What is it that you are telling your clients when they ask you or seek your opinion about where to invest within the equity landscape?
Neeraj, I think firstly, let me start with saying that I'm really happy hearing from Ashish of what he really said. Because what I also, kind of intend to talk about today is that the entire industry today operates a Flexicap fund as a pseudo large cap, right? It's been happening since the last 2018 when the categorization happened. I've been tracking these funds extremely closely since then, and you would see that these funds have 70-80% large caps and a very small percentage of what mid cap, small cap allocation is there. Ideally, not what you really want a Flexicap to do. By the name Flexi, you really want to move around with where the macros are moving, or probably take larger bets on what will really work in the favor of the investors and in investing. But unfortunately, the space has not been able to do that on the industry average standpoint. So since 2018, if I can be very specific, I think those times have gone where, we would say, if we don't understand what and where to put money in, put that in Flexi so that the fund manager who understands it better will be able to do a better job than you and I will be. But I think that's not what the industry is given back. Because if you, again, like I said, if you look at the industry average, it is a pseudo large cap. And hence, since 2018, what has started happening is that everybody that I know of and in my ecosystem have started, kind of allocating money to large, mid, and small separately, instead of saying that do Flexicap and let the fund manager manage, right? Even if you look at some very basic data point, and we can't go back before 2018 because of the categorization, and it will not be an apple-to-apple comparison. But if you look at a combination of equal weighted, large, mid, and small fund, right? This combination has done much better than what the current Flexi market offers, right? In terms of risk, you compare both standard deviation. The equal weight portfolio has slightly higher standard deviation than probably a Flexicap, but on the rolling return basis, the equal weight performance is far superior than that of a Flexi, right? Then the point comes is why do you do Flexi in the way it is a part of the industry right now? And to share some data on what even Ashish pointed out, right? If you look at the last 3 years of industry category average of large cap and Flexi, you'll understand that the standard deviation of large cap and flexi is almost the same at 21.3, 21.4. But you will see a serious 1.5% alpha that flexi has been able to generate versus a large cap. So I'm saying flexi today, if you look at risk return, is able to bring in the same kind of risk, but is being able to outsmart large cap returns by a stiff margin, right? Given looking at only the last 3 years since the categorization. So what I'm really looking at right now or trying to do is, while equal weight makes a lot of sense because the flexi is not operating the way it should be, why don't you replace the large cap category by the flexi, right? So you do flexi as large cap, and then you allocate money to mid cap and small cap. I think that combination is far superior than a standalone flexi on risk return basis.
Okay. Okay, that's interesting. And what Ashish is trying to say is that's what they'll try and tackle, which is create a pure play flexi cap fund in the essence of a multi-cap fund having 25% separately. So it's interesting insight, and thanks for that, Kirtan. Ashish, what are the chances of, I mean, what's the internal sense that you guys have when you think of building a portfolio in a flexi cap fund, which is 25% mid cap, 25% small cap, and 50% large cap? Is this aimed at generating a far higher alpha over normalized returns? What is the internal target of what you would want to do by this fund?
So I'll just clarify one thing, Neeraj. We are basically going to have anywhere between 30 to 50% in small and mid cap. And since we are calling the fund flexi cap, we will not have to necessarily compulsorily show 25.
Yeah, true, of course.
So that's just a clarification.
Sorry,
yes, there are two things that I wanted to share. One is that clearly small and mid cap over long periods of time, and by long periods we mean not like 10-20 years, but in any 3-year time, 5-year time frame with the cycle, small and mid caps can afford more alpha generation as compared to large caps. That is one. Second is precisely that is why within the White Oak group we have a very, very large research team. Our investment universe is everything over $150 million. So say give or take 1,000-1,200 crore plus, everything about 750 odd companies, they all fall within our investment universe. All of that is mapped to this large battery of analysts that we have. So the target clearly is to beat BSE 500 total return index by as high a margin as possible. But equally true that one needs to look for a good information ratio and hence good consistency of alpha, not just high alpha and then participating in this whole winner rotate kind of game. So you want high alpha, but you want consistency. And I think from that perspective, having a good mix of large mid and small cap is the right thing to do. If one actually tries to, what Kirtan was alluding to, if one tries to do that, saying that, look, at the right time, I will be into large cap, and then at the right time, I'll sell down those positions and I'll bank on small and mid cap. I think there's no just-in-time investing. That's not going to be possible. So best is to have a reasonable allocation at all points in time, and then just, make relative value switches if you find it relevant, but not to do something really, really drastic or dramatic, like making some market cap zero and then, overloading something else.
Okay. And this is the strategy that you would pursue. It's not a timing-based strategy. It is something that you would have done irrespective.
Absolutely.
Okay. Great. Ashish, good having you. Thank you so much for taking the time out and being with us today. Much appreciated.
Thank you, Neeraj. Thank you, Kirtan. Thank you.
All right, viewers. So that's the view from Ashish Somaya of White Oak Capital about their maiden offering, which is FlexiCap. Now, we tried to ask Kirtan about whether this is the right time to get into a FlexiCap fund, to which he said that as per his analysis, that if you want to get into a large cap fund, instead get into a FlexiCap fund because it gives this better returns with the same kind of risk. Now, Kirtan, we always do this, that when the AMC representative is not there or when the AMC representative has gone away is when we ask the advisor about what does she or he think about this offering. Now, I've asked a couple of advisors over the last couple of months about what do they think about NFOs in general. And their standard view has been that unless the NFO brings something special to the table, they would want the fund to show a performance for 3 to 6 months and then get into it. What's your sense about this NFO first from the White Oak Capital stable, considering that I heard you say that most of the FlexiCap offerings as of now are not true blue FlexiCap funds in the truest sense?
So Neeraj, I think my biggest problem with the FlexiCap category is what I spelled out, right?
Yeah.
If White Oak, and I was so surprisingly happy that he spoke first, and he kind of pointed out the same thing that I was supposed to say. So if White Oak is in that sense being able to address this space, I think then the FlexiCap fund will definitely stand out. But look, this larger philosophy of what are they going to do and where are they going to allocate, that is not going to give anybody confidence in terms of fund performance. At the end of the day, yes, you might stand out drastically with respect to what the industry is doing and you might take the right step. That's a brilliant positive, but you will still need some performance history to go back to kind of try and understand whether this is the right kind of fund that you really want to invest in, right? Is because if you currently look at the offerings, there are 20 plus funds available in this category, and category is close by with 10 years, 15 years of experience of the fund being around. Of course, the relative performance may be very little because 2018 the categorization happened, but largely I think I would still stick to the point that we should wait for the fund to perform and then move
on. Okay, just one quick follow-up, Kirtan. Yeah, so is it, so while you're saying that these FlexiCap funds are not true blue in the truest sense, but since you are saying that some of these could be good substitutes to large cap, which means that you believe that there could be a fund or two, maybe there could be 5, 6 funds, but we can't discuss 6 funds really. So I would urge you to maybe, if you can, give us a couple of examples of well-managed FlexiCap funds. These is not be an exhaustive list from you because you could be looking at 5 or 6 for your clients, but maybe you can share a couple of those names where you believe that the fund house and the manager are doing good things.
I think Neeraj, 2 names that come to my mind at this point in time is Parag Parikh FlexiCap and SBI Focused Equity. I'll give you a couple of reasons why they cut the list short for us. First, of course, is while you look at the risk-adjusted performance of these products versus, let's say, even a large cap or the competitive FlexiCap in the category, they've been outperformers consistently. And I'm not talking about a point-to-point analysis, but I'm talking about a rolling analysis for at least 7 years before I make this comment. That's one. Very importantly, also, we've been very closely monitoring the fund manager, and given what the fund manager has been saying in terms of performance or the allocation of the portfolio construct versus what they're really doing on the ground. I think they're very close to what they've been spelling out versus what they've been doing in the fund. But one very important point that I really want to highlight versus a lot of other funds in the same category is that the fund management team is pretty consistent. Now, I don't want to name other funds, but if you look around in the same category, there have been consistent change in the funds, and then hence, if you look at the performance, then you can't really make an apple-to-apple comparison because the fund has realistically moved 360 with the fund manager change. So I think that is another very important data point because of which both of these funds stand out in my.
Very interesting. Kirtan, thanks for that. And thanks for the candid feedback. Now, Kirtan, before we wrap this up, for the last 2 weeks, we've seen tremendous dichotomies in views on what could happen to IT stocks. On the mutual fund show, we can talk about thematic funds maybe. Now, I just wanted to understand from you. So viewers would be wanting to know, are there thematic funds, firstly, which do a large cap or IT investing? And if so, is this a good time to invest in some of these? Why or why not?
So Neeraj, yes, there are thematic funds which focus on IT as a sector. Now, if all of us largely look at IT as a space right now, while there has been a correction of 25-30% in larger names and most of the stocks, I think if you look at the last 5-year, 10-year valuations of these companies, we are still far off from the median. I think on the large IT companies, we are probably at 22 to 25 times versus the historical average of 20. And on the mid-cap side, we are roughly anywhere in the range of 28 to 35 times, right? Now that's slightly steep versus the average that we've seen, right? Can the market discount another 5-10% on these stocks? Very much possible. But if you look at the performance of these sectorial funds that we are talking about, they've generated a significant alpha on a 3-year, 5-year, 7-year basis, specifically to do with the sector allocation to the sector funds. But I'll tell you my problem with this. Now, if we talk about somebody who has allocation to large cap, somebody who has allocation to flexi cap, after BFSI, IT is the biggest sector in which most of these funds are allocated. Now, if you break down and see the top funds, you will see roughly 15% allocation in most of the funds to technology, right? Now, largely, if you look at the portfolio construct, you will see 30-35% to BFSI, 15% to IT already there in most of the investing that people will do in terms of diversification. Now, we are saying that even if you've diversified yourself in 4 or 5 funds, but your larger concentration to sector, 50% is banking and financial services and IT. The point that I'm trying to make here is how long or how much do you really want to take exposure of your overall portfolio to 2 sectors?
Yeah, sure.
In my opinion, going above 20% allocation to one particular sector can be futile, right? So probably depending on what your allocation is, right, of your current portfolio to IT, maybe you can push that to 20%, but I don't largely think that even if times are really interesting to allocate a lot of money to IT funds, you should really go ahead and take aggressive bets more than 20% of your total allocation, because most of your funds have allocation to IT and to a significant margin.
Okay. So effectively, even if you are at times saying that thematic funds could be a good idea and it could happen at some time, in case of IT at least, or maybe by that extension in terms of banking as well, you don't think that those would be good thematic funds because diversified funds anyways have a large exposure?
Absolutely. Like we said, 50% of the portfolio is massive. I mean, we are investing anywhere in the range of 45 to 50% just in 2 sectors. And of course, we know both these sectors are large and they are largely FII favorites, right? So we've seen what happened in the last 1.5 years while FIIs have started selling and how both of these sectors have largely reacted. I don't think it in my opinion, defeats the purpose of diversification that we are talking about. While we might theoretically feel that we've diversified across AMCs, across different categories of funds and styles of investing, but you are still largely stuck to two sectors with 50% of your portfolio. I think that's too much to allocate to sectors. So I'm a little wary of doing thematic or sector investing, specifically in both of these sectors for sure.
Lovely explanation, Kirtan. Thanks so much. And thanks for joining us and giving us a great view around 2 fairly crucial topics from a market's perspective currently.
Thank you so much for having me, Neeraj.
The pleasure was ours. And viewers, thanks for tuning into this leg of the Mutual Fund Show.